Click the bell icon to get latest videos from Ekeeda.
Hello friends, when partnership follows fixed capital method, we come across partner's current account. At the time of dissolution, if balance sheet shows partner's capital account as well as partner's current account, how to do the solution? Kishore and Suresh were partners sharing profits and losses in the ratio of 3:2. That is 3/5, 2/5. Their balance sheet as on 31st March was as under. Let us go through the asset side. Bank account, it will be transferred to the bank account debit side to balance brought down. Stock, realization account debit. Building, realization account debit. Plant, realization account debit. Debtors, realization account debit. Liability side, creditors, realization account credit. Bills payable, realization account credit. Kishore's capital account, his capital account credit. Suresh capital account, his capital account credit. Kishore's current account, his current account credit. Suresh current account, his current account credit. The firm was dissolved on about date and the assets were realized as under. Stock 50,000, 1. Debtors 25,000, 2. Plant and machinery 80,000, 3. Building 2 lakhs, 4. 4 assets are sold. Amount is received. Bank debit, realization account credit. Kishore agreed to pay off bills payable. Liability taken over by partner. Kishore's current account will be credited, realization account will be debited. Here bills payable will be paid as per book value, that is 25,000. Creditors were paid off 80,000. Amount is paid, bank credit, realization account debit. Dissolution expenses were 5,000. Bank credit, realization account debit. Past journal entries in the books of Kishore and Suresh, and also prepare realization account, partner's current account, partner's capital account, bank account. Partner's current account is separately required to be asked. So here we are required to open partner's current account as well as partner's capital account. First step is called as transfer step, where we transfer all items in balance sheet to various accounts. Let us start with asset side. Bank account 55,000. This will be transferred to bank account on debit side. Bank account debit side to balance brought down 55,000. Stock, building, plant, debtors. These will be transferred to realization account on debit side. Realization account debit side to sundry assets. Stock, building, plant, debtors transferred. Total book value 4,40,000. Let us move to liability side. creditors bills payable. These two liabilities will be transferred to the realization account on credit side. Realization account credit side, by sundry liabilities, creditors 90,000, bills payable 25,000, total 1,15,000. Kishore's capital, Suresh capital, this will be transferred to their respective capital accounts. Partners capital account credit side, by balance brought down, Kishore 2 lakhs, Suresh 1,50,000. Next, Kishore's current account, Suresh current account. This is appearing on liability side, so it will be transferred to their current accounts on credit side. Partners current account credit side, Kishore, Suresh, by balance brought down 18,000, 12,000. The firm was dissolved on above date and the assets were realized as under: stock 50,000, 1, debtors 25,000, 2, plant 80,000, 3, building 2 lakhs, 4. 4 assets are sold, amount is received, cash bank account will be debited and realization account will be credited. Cash bank account debit to realization account: stock 50,000, debtors 25,000, plant 80,000, building 2 lakhs. Total amount received 3,55,000. Realization account credit side, by cash bank account for assets realized, total amount is 3,55,000. Kishore agreed to pay off bills payable, that is rupees 25,000. Kishore's current account will be credited and realization account will be debited. Realization account debit to Kishore's current account for bills payable taken over, 25,000. Partners current account credit side, by realization account Kishore's for bills payable taken over, 25,000. Creditors were paid off rupees 80,000. Cash account will be credited, realization account will be debited. Realization account debit to cash bank 80,000 for creditors paid. Cash bank account credit side by realization account 80,000 for creditors paid. Dissolution expenses were rupees 5,000. Amount paid, bank will be credited, realization account will be debited. Realization account debit to cash bank 5,000 for dissolution expenses paid. Cash bank account credit by realization account 5,000 for dissolution expenses paid. We have recorded all adjustments. Let us proceed to close ledger. First, we are required to close realization account. Realization account is closed. Debit is heavy. We are getting balancing figure on credit side 80,000. This is loss on realization, which is distributed among partners in their profit sharing ratio 3:2. Loss is transferred to partners current account. Kishore 48,000, Suresh 32,000. Realization loss is transferred to partners current account, debit side, to realization account. Kishore 48,000, Suresh 32,000. Now partners current account will be closed and balance will be transferred to their capital account. Partners current accounts are closed. Kishore as well as Suresh, they are showing closing balance, balancing figure on credit side, which is transferred to their capital account. So it will be transferred to the debit of their capital accounts. Partners' current account balances are transferred to partners' capital account on debit side to current account Kishore 5,000, Suresh 20,000. Now partners' capital accounts are closed. Credit side is heavy. We are getting balancing figure on debit side. Kishore 1,95,000, Suresh 1,30,000. This will be transferred to cash bank account. So we have closed current account and balance is transferred to partners capital account. Now partners capital account is closed and balance will be transferred to cash bank account. Cash bank account credit side, partners capital balances are transferred. Kishore 1,95,000, Suresh 1,30,000. Now we have to close cash bank account. Total of debit 4,10,000. Total of credit is also 4,10,000. That means cash bank account is tallying. It shows that we have correctly solved all ledger accounts. Therefore, cash bank account is tallying. We have completed ledger part of the question. Now let us move to journal entries. Let us start with the journal entries. First step, transfer step. We are required to transfer stock, building, plant and debtors to realization account. Realization account debit 4,40,000, to stock 55,000, to building 2,50,000, to plant 1 lakh, to debtors 35,000. Being assets transferred, that is at book value. Liability side, creditors and bills payable are transferred to realization account. Creditors account debit 90,000, bills payable account debit 25,000, to realization account 1,15,000. Partners capital account are transferred to their capital accounts, current accounts to their current accounts. Cash account is transferred to cash bank account. First adjustment, stock, debtors, plant and building sold. Entry will be cash bank account debit to realization account. Cash bank account debit to realization account 3,55,000, being assets realized. Kishore agreed to pay off bills payable, that is 25,000 bills payable are taken over by him. Realization account debit 25,000 to Kishore's current account 25,000, being bills payable paid by him. Creditors were paid off rupees 80,000. Entry is realization account debit to cash bank. Realization account debit to cash bank 80,000, being creditors paid off. Dissolution expenses were rupees 5,000. Entry will be realization account debit to cash bank. Realization account debit to cash bank 5,000, being dissolution expenses paid. With this we have done all adjustments. Now we have to close realization account. Realization account is closed. There is a loss of 80,000 which is transferred to partners current account Kishore and Suresh. Kishore's current account debit 48,000. Suresh current account debit 32,000. To realization account 80,000, being loss on realization transferred. Next is we are required to close partners current account and balance will be transferred to partners capital account. Kishore's capital account debit 5,000, Suresh capital account debit 20,000, to Kishore's current account 5,000, to Suresh current account 20,000, being balance of partners current account transferred to capital account. Finally, partners capital accounts are closed. Balancing figure we are having on debit side, it is transferred to cash bank account. Kishore's capital account debit 1,95,000. Suresh capital account debit 1,30,000 to cash bank 3,25,000, being an amount paid to partners in final settlement. Here we have completed all the entries. When journal entries are asked in board exam, we are also required to show grand total, otherwise they deduct 2 marks. Here grand total we have 14,50,000. In this question we have completed ledger as well as journal. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.